All right, let's talk about crypto in 2025. If you had to pick just one word to describe the market that year, it would have to be contradiction. Seriously, it was a year of just unbelievable highs and some really brutal lows. We had Wall Street money flooding in, while at the very same time you had illicit funds pouring out. It was like the market was being pulled in two totally different directions at once. So the big question is, how do we get here? And more importantly, what does it all mean for the future? Let's dive in and break it down.
This quote from CoinMarketCap, it absolutely nails one half of the story. This was the year crypto finally put on a suit and tie. It stopped being just about hype on social media and started being about, pension funds, huge asset managers, and even governments starting to take it seriously. This was the story of formal, mainstream adoption.
So here's our game plan. We're going to start with that big contradictory picture of 2025. Then we'll zoom right in on the absolutely wild ride Bitcoin went on. From there, we'll look at a really fascinating case study of an older coin that made a comeback nobody saw coming. We'll dig into what drove it, but also look at the major challenges it's still up against. And then we'll pull back out to see what this all means for where the market's headed in 2026.
And that really brings us to the heart of it, the central tension of the entire year. On one side, you've got the arrival of serious, regulated institutional money on a scale we've just never seen before. But on the other side, you've got total chaos. We're talking record-breaking hacks and volatility so sharp it could give you whiplash.
Now, look at this slide. What's so wild is just the sheer scale of these two opposing forces. You have over $50 billion flowing into spot Bitcoin ETFs. That's a massive signal of institutional trust. And at the exact same time, a staggering $2 billion was stolen by North Korean hackers alone. It's like you're building this brand new shiny skyscraper, but right next door, there's a wrecking ball just swinging wildly. That right there was the dual nature of the 2025 market.
And nowhere was this contradiction more in your face than with Bitcoin itself. Its journey in 2025 was the perfect example of this tug of war between that structured institutional demand and, well, the wild, untamed world of crypto derivatives, which are basically just high-stakes bets on its future price.
So, in October, Bitcoin just blasted past all its old records, hitting a new all-time high of $126,000. But here's the thing, this wasn't driven by memes or some viral tweet. Nope, this was the direct result of those spot ETFs funneling in capital from pension funds and asset managers. We even saw U.S. states like Texas start buying Bitcoin for their strategic reserves. For the first time, Bitcoin wasn't just being traded, it was being allocated as a serious global asset.
But then, the roller coaster just plunged. October 10th became what people are calling crypto's Black Friday. The derivatives market, which was just completely saturated with borrowed money, leverage, it just broke. It triggered this insane domino effect of forced selling, a cascade of liquidations that vaporized billions in a matter of hours. And in the 2 weeks that followed, over $1.3 billion fled from digital asset funds. Months of gains, just gone, in a flash. And there was no external shock. It was just pure, unrestrained leverage.
Okay, so amidst all of this chaos across the entire market, a really interesting story was playing out that perfectly illustrates this conflict. And it involves an older coin, one that, frankly, a lot of people had completely written off, the surprising comeback of Bitcoin Cash.
Now, to really get Bitcoin Cash, you have to understand what a hard fork is. And the sources use a great analogy for this. Think of it like a father-son relationship. Bitcoin Cash, or BCH, it forked from Bitcoin BTC way back in 2017. It was basically like a child moving out to start their own household because of a really fundamental disagreement about how the family should be run in the future.
And that big disagreement? It all comes down to this core difference in philosophy. The original Bitcoin community split into two camps. You had the small block side, who wanted to keep Bitcoin's blocks small to keep it super secure and scarce, positioning it as digital gold. Then you had the large block side, who created Bitcoin Cash. They wanted to make the block size way bigger to make transactions faster and cheaper, prioritizing its use as electronic cash for everyday payments. We're talking two completely different visions for the exact same technology.
For years, it really seemed like that digital gold story was the clear winner. But then, in 2025, something shifted, and Bitcoin Cash had this stunning comeback, actually outperforming Bitcoin by a huge margin for the year. So what on earth was behind this rally?
The single biggest headline was this. A NASDAQ-listed company, MF International, announced it was raising $500 million with the specific purpose of buying Bitcoin Cash for its corporate treasury.
I mean, this was a massive vote of confidence and a huge signal of serious institutional interest that I don't think anyone saw coming.
But it wasn't just that one headline. There are a few other key factors that created a kind of perfect storm. You see, as all that speculative money started flowing out of Bitcoin after its peak, investors were looking for other opportunities, these value pockets. At the same time, we saw huge whale activity. At one point, a single address bought over 100,000 BCH in one day. You add in some key technical upgrades to the network and a 50% jump in actual transaction volume, and well, the stage was set for a major rally.
But, okay, to get the full picture here, we have to bring this comeback story back down to earth. Because despite that really impressive rally, Bitcoin Cash is still facing some enormous structural challenges that you just can't ignore.
So here's the deal. The competition is fierce. In the payment space, it's not just Bitcoin it's up against. It's everything from Litecoin and Solana to stablecoins, which a lot of merchants prefer because their price doesn't swing wildly. Its DeFi ecosystem is, well, it's tiny. We're talking less than $9 million locked in it, compared to Ethereum's $71 billion. The community has also been fractured by previous splits, which drains resources. And despite its whole purpose, real-world adoption by merchants is still very, very low.
This quote from an analysis by Trading Key really sums up the counter-argument perfectly. Yes, the comeback in 2025 was real, and it was driven by some tangible things. But the long-term story is much more complicated because of these really deep-seated structural issues that call into question its viability against its much bigger brother, Bitcoin.
All right, so let's zoom back out. What does the roller coaster ride of Bitcoin and this surprising story of Bitcoin Cash tell us about where the whole market is headed in 2026? Well, it paints a picture of a market that is just deeply, deeply divided.
When you look at the forecast for Bitcoin, that division becomes crystal clear. Most analysts have a base case where prices kind of grind sideways, somewhere between $120,000 and $170,000. But there are really strong arguments for both a bearish case, falling below $84K if the economy gets worse, and a bullish one, breaking above $170K if that institutional money starts flowing again. The bottom line? There is absolutely no clear consensus.
And really, that's the key takeaway from 2025, isn't it? The crypto market is being pulled in two directions at once. It's maturing, for sure. It's becoming a structured institutional asset class. But at its core, it is still a deeply speculative and volatile market driven by leverage and big stories. And that identity crisis, it's not going away anytime soon.
Which leaves us with the big question for 2026 and for the years to come. As crypto continues to get embedded deeper and deeper into the global financial system, what's ultimately going to define its future? Is it going to be the steady, structured hand of institutional finance? Or is it going to be that chaotic, narrative-driven, speculative spirit that has defined it for so long? That, right there, is the central conflict to watch.